Welcome back, everybody. I would quickly like to run through a trade example that I came across while I'm busy doing some forward testing in my simulator. If you notice on the left hand side, I am looking at soft forex. That's what I'm using. There is my little window. That's what I'm using for this example. Now, in this particular example, let's quickly do an analysis. As far as timestamp that I am looking to trade, this is, if we just go down to the 1 minute time frame, we can see that this would be 1750. That would be the broker time, and I have calibrated that down to 1050 to 1110. That would be your ICT macro, 1050 to 1110. That's what I would be looking for in this specific trading idea. That's what we will be focusing on, 1050 to 1110. I've calibrated this platform to TradingView, so I know that the times are in sync so that I am able to backtest. So looking at this example over here, we are on a daily chart of the S&P 500. You can see that right there. See it on the top right there. You can see that we have traded into a daily fair value gap. So I expect price to give me bullish prices, and I expect price to rally up higher. Take note that we have a volume imbalance right over here, and we have also traded the, as you can see, we have traded the 50% of the fib, and we have not closed below. So I am expecting bullish price action on the higher time frame. Now, you do need a bias. Starting off, you need a clear bias. In this case, we are clearly bullish, and then you need to form a narrative going down before you can execute in any trade. So let's work down. Looking at a 4 hour, I can see we took out these equal lows down here. We are inside of a fair value gap, and we are inside of the daily fair value gap. We have a 4 hour relative equal high up here, and we have this alt high up here. Looks like we are again moving up higher from that rejection of that daily fair value gap, 50%. On the 1 hour time frame, again, we can see that we took out these lows over here, these relative equal lows. We have a 1 hour fair value gap up here, which we can trade up into, and then we have these equal highs, these 4 hour relative equal highs, 1 hour relative equal highs up there, which are all targets for the upside. Looking down at a 15-minute time frame now, we can see that I have a breaker denoted over here, which would be high, low, higher, high. And I was looking for a shorting idea, which then, looking at the higher time frame, would not have come to fruition. As you can see, we traded that and we did rally away from it, but we also then had this low, high, lower, low right there, and we had this big like breaker block right there, which that is keeping price. So I am looking for these relative equal highs in here and this alt high over here. These are my targets to the upside. So forming a clear narrative now, I can see we have equal highs over here and this alt high, and we have this 15-minute fair value gap right in there. Grading this swing, we can see that this 15-minute fair value gap and this equal high right there would be above the 50% of the fib, which would be a premium. Looking at a 5-minute chart, we can see again that we have this breaker block denoted right there, high, low, higher, high. Price came back to that, rallied away from that, and we're inside the 15-minute low, high, lower, low. That's your breaker block. Extend that in time. That's where we are at now. I am looking for longs, once again looking for price to trade higher. Now let's quickly look at the 1 minute time frame, and let's keep in mind 1050 1110. That would be our macro. Let's, for the sake of clarity, let's just go ahead and throw these lines on there, not that we need them. That would be our macro. So now, looking at this piece of price action over here, let's just get some clarity and let's do a quick analysis. We can see that we have these relatively equal highs in this area. So we can say we can take a partial over here above this high. We could take a partial. That would be a partial. And then we have a volume imbalance over here, which I've noted. And we have which would be a fair value gap right in there with a volume imbalance overlapping. So looking at this chart, we have those levels to monitor, and then we have this high right here to monitor, which would be a partial. So now let's forward a little bit and let's see what happens over here. Let's see. Here's our macro. Now right there, as price trades this candle, right there, it's pierced the low of this one, of those equal lows right there. This is this one and this one. It pierced those, and this is why you see this rectangle over here, which would be a low, high, lower, low. That would be a breaker block, denoting halfway of the breaker block. In this case, I'm only marking up half of it. I'm not doing the whole range. You pull the fib on that right there like this. You pull the fib and you see right there, we can do half of this range. We don't have to use, when it's a big range, you can opt to mark half of the range. Let's keep forwarding price. Now in this particular example, when price trades like this, I want to see a solid candle close above the breaker block, which we did not get in this example right over here. So let's play the next bar. As you can see, the next candle opens up, and in essence, let's go ahead and let's quickly look at this candle play out. See, it opens up higher, it trades down, and that would be your entry if you get rejection off of this level. That would be your entry point. That would be an entry point because you had rejection. I just did not like the way price delivered in this example, but that would be an entry point for you. All right, I'll explain this level in a moment. All right, so let's go ahead and play price, and then I will execute on this. It's not rejecting yet. There we go, rejecting. So I would take a buy right there. Take profit would be, let me look at our time frame to see where I would have that. I would look at getting this 15-minute fair value gap low right above these highs. That should be a good partial or a take profit. Let's just put it at the low of, let's just leave it there. Equal highs, let's leave it right above there. That's fine. Let's leave it there. We will adjust that take profit point if needed. For the stop, I would have a stop. You have a fair value gap in here. You have a volume imbalance. Volume imbalance, fair value gap. You have an order block right there. For this example, I would have my stop loss below the mean threshold of this order block right there. So that would be my order. I would accept that, and then we could just play this out. see, hold on, let's quickly go back. So if you didn't take this candle that I entered upon, but let's say you were looking at price action, there you had another entry point. Price rejected right there again. So that would have been another point for entry. Now, let's talk a little bit about order flow and how you would manage a trade. In this specific idea, I would want to see price trade through this volume imbalance without getting stuck there. I want to see big candles, big expansion, trade right through it. There we go. That's what I want to see, through the volume imbalance. Trade right through that, no resistance shown. Now notice that we also did take out this high over here. Partial would be above here. I think we will, in this example, we will get this take profits. So we will probably have to adjust that take profit up higher. There we go. That's what I would want to see. Price traded through these levels, and notice how it came back to the volume imbalance over there, and then we used that as a support, and then we traded up higher. So you could have essentially used this to go long and then take another position, or that would have been your trade idea. Let's see here if price will give me a clean retest. It doesn't seem like price will. I think that retest right over here, this one, and this is another one of the examples that I want to look at. Let's go ahead and quickly modify this. That's just the order window that I want to see that. And that's just in the calendar, which I also want to see. I just want to go ahead and adjust this order because we will probably get this take profit. So I'll just move it up to the high of the fair value gap for the example, because I really want to show you order flow and trade management in this example. It's not about the take profit getting hit in this one. We will look at trade management. Now look at this example right here, how we came above this high, which you could have taken a partial right there. That would have been perfectly fine. But now we have equal highs over here, which now, let's look at this example again. So let's quickly play this price action. Looking at how price traded that volume imbalance, this fair value gap down here with a volume imbalance overlapping. Let's see if we can get right there. Right there we had a rejection. That would be another area to get a long. So looking at that long, we could just place a take profit right there. And for this one, if you took a long in here, you had this volume imbalance, this fair value gap, you had that volume imbalance overlapping, you had this order block. I would place my stop below the mean threshold of this order block, right around there. That's why I had this level on, because I was looking at this specific level over there. So let's go ahead and get rid of it. All right, let's go ahead and play some live action, see how it gets out of this, how price gets out of this area. Doesn't give you any drawdown. It would have only had this 1 minute drawdown. There we go, there we go. That's our partial. I want to see expansion above this. Right there, that would be a partial position. So let me go ahead and take a partial. Hold on, give me 1 second. Notice here how the 5 lots, you can just watch that and you will see that if I take partials over here, we will have 2.5 lots running on the position. So partials are set, which then mean Hold on. Break even for the second one. I do not yet want a break even for this position over here, because that one could still come back. Looking at this over here, we have a order block and we have a fair value gap over here. As soon as this candle closes the current one, then we have a fair value gap over there. So there's still a potential for price to trade back down there, so we have to keep this in mind. So trade management is key over here. Okay, hold on, wait. I made a mistake. Hold on. Let's just go back. I made a mistake over there and still had this one as a break even. Let's go in and quickly fix this because I got two open over here. Okay, let's try again. Take the partials off. Five lots. Okay, close that one. Let's just see which one. I gotta see which one. Let me see which one is which. Number 23. That's gonna be the one that I gotta modify. Stop loss. Okay, seems like that one's stop is down there, which is perfectly good. That's where I want the stop to be. What about my first position? Where's that stop? Stop way down there. Okay, well that seems like it's good now. I don't know why it stopped me out on that position. Anyway, just go ahead and skip that candle. There we go. We're inside of the order block. So now we have the order block. We have a volume imbalance over there, which we can annotate. We traded that, and then we have this fair value gap volume imbalance over here, which we want to see push price higher. There we go. Now I want to see a move above that high in order for us to expect continuation. Looking at this whole idea, I can already see that this is a high resistance liquidity run. In the sense, look at how we give and take with all these candles. It's not clean, so this is a high resistance liquidity run. That's why we took partials in this area. We keep it logical and simple. Okay, price did not react the way that we wanted to see price react. We traded again at this order block and volume imbalance. There we go. That's what I want to see. I want to see this type of a rejection. Now this could be another potential entry point if you have this rejection and you got a volume imbalance coming off of a inversion fair value gap level. That would be another entry point for you if that's what you like. In this example, we are not focusing on this one. Let's continue playing price. That would be where you would take an entry point. For the sake of this example, let's go ahead and let's just take an entry point off of that as well. There it is. There's the rejection. There's the entry long. Again, the take profit, let's just place it right there. And then for the stop loss of this one, you have a volume imbalance, and then you have a order block right there coupling with that. And then you have on this side, we have a volume imbalance over there. I would place it below this fair value gap volume imbalance, targeting this high over here. Now let's shift this over. Let's go ahead and pull it back, shift it over up over here. We have this area for a partial, and then we have these relative equal highs in there as well. So looking at your higher time frame, you can see that we are still to go up to this old high. Looking at that, we still have those targets in place. We are still expecting them to be hit. Now keep in mind with these executions over here, particularly this one, that would be outside of the 1052.11 10 macro. So that would be outside of the macro, so it would not be ideal for you to take this entry point. If, for example, per se, it was in this time zone in the macro, then it would have been a potential to take that. But for purpose of showing you trade management, in this example, I have taken this position as well. So let's go ahead and go forward. See, we have this high and then we have these little highs in there. Those are equal highs. So I want to see expansion above these levels. We have a volume imbalance there, and then again we have the order block over here which it tapped, which could also have been a potential entry point. Let's leave price and see what price does. Okay, good. Now with this move right over here, I want to see expansion because we've rejected this level now twice. So now I want to see expansion, big candles going up, or else you have to start applying a time filter and you have to start taking positions off. Okay, we're again at the order block. You see this is high resistance. Notice how we formed equal highs. So we expect these equal highs to be taken now. There we go, right above those equal highs. Let's see. There we go. That would be a partial point. Let's go ahead and take our partials. Follow your rules. People, follow the rules. Rules are no use if you do not follow your rules. Partials pay, like ICT says. Partials pay every time. Partials pay every time. All right. Let me quickly go ahead and modify these positions. Looking at this position down here, we can now take that stop and we can bring that stop, I believe, up to here. If we then get taken out, then we would be taken out with a profit. That would be our first position. For our second one, we would be looking at putting this stop at this level over here, not raising it above this level as yet, as we have all this choppy mess in here and we have a new order block. So we could raise this stop. I wouldn't take it higher than that, giving it breathing room, still keeping in mind that this is up and down, being choppy, giving you consolidation, so you have to keep this in mind. So we might take a stop on this one, but that is fine. Stop is better than taking a loss, since we have already taken a partial. For the last position, which is this one over here, we can take that stop, pull it up above there as well. Okay, that's good. For the next target, we would look at this equal high in here. Let's go ahead and look at the higher time frame and let's see where we are. There we go. We have taken this high now, which would have been this high, which would be our target, and then we would get the low of this fair value gap on the 15-minute, which was our initial target. So let's go ahead and see what price does. So that would have been another partial. Now, as far as looking at this price action, let's pause this for 1 second. We can see if it wants to pause. Give me a moment to look at this. We have a new order block over here now, and we have its mean threshold as well. And we have volume imbalances in here. Again, we can see this is high resistance liquidity run. So these are not ideal conditions. So let's go ahead and continue playing price and see how price reacts at these levels. Okay, going through the opening. Let's look at the mean threshold. Let's see how price reacts at that order block. See how it reacted? It touched it, moved away. Let's look at these wicks. Look at this wick in here. This long wick. 50% of that. 50% of that noted. If we do trade down there, that is permissible, which we did in here. We traded down to that 50%. We get this wick in here. We can mark this one. 50% of that. Let's look at this level. I believe we're gonna go into these wicks and this order block over here. Let's see what price does. See, we are back at entry in this one, which we were well aware of this to happen because this is high resistance. So we already took partials. This is the reason why you take partials in these conditions. Let's go ahead and see what price does. Now at this point, we traded through this order block and showed no resistance to this level. So now we focus back to this one, meaning we've lost one level. One PD array has been lost. So we look at this order block and this volume imbalance over here, and we expect a move over here. If we lose this one, then we've lost two levels. Then we would look to collapse the whole position, as the position would no longer be viable. So let's see, we have had a rejection. Now I want to see fast, quick candles higher above this high. Price is still finagling. Look at how it's finagling around the order block right there. Failure to trade into the level. It's like a brick wall. There we go. There is our impulse move. That's what we want to see. That confirms that we are still in a good trade. So right there, that would be a partial if this thing would allow it to stop. That would be another partial point. Let's go ahead and take partials. You pay yourself for sitting through all of this choppiness and this consolidation. You have to pay yourself something. So there we go. Profits have been banked, made. Now I want to see expansion above into these levels. Note that now we have new order block. We could just use in this range. We have this whole array, which would be a valid order block, and then we also have the lowest one down there if price wants to come back down there. But I don't see any reason why it would want to go back there, but it is noted in the chart. We do expect if it does go there, then we would not be caught unexpectedly. Seems like we want to go down into that order block again. Price is tapping it right there. It's tapping the open of the high of that candle. Let's see. Here we go. We're going back to it. It kind of just tapped it right there. Let's see if it still wants to push lower down in there. Yes, it does. It's showing no resistance. Going back to the lows. Look at these wicks. This wick's 50%. Back to that level. Now I want to see rejection in this candle. We have had rejection. Will we get expansion? Let's see what price gives us. No reaction at this level yet. Let's see, price is acting as a brick, so we will expect expansion. That is our expansion. This thing does not want to pause with me. Now we got the partial right there. That would be another partial point. Let's just see if price wants to go and then hit the take profit. Let's just see at the higher time frame. Pause 1 second. We are now inside of this fair value gap as we wanted to see, and then we are above these highs over here now. So that would be more than enough for this trade idea, keeping in mind that this is high resistance liquidity run, probably not ideal conditions, so you would have to show a lot of patience, and it would be ideal to execute inside of the macro. That's the whole focus of this video, but the focus of this one is looking at the order flow and how you would manage the position. So let's just see if price would give me expansion. Let's just go in and let's speed this up. So now we have this order block down there, and then we have this one in here. Let's see what price does. Okay, trades back down to the lower one right there. Will we get the expansion? Okay, we have rejection. Expansion is now expected. And there you go. That would be that trading idea panning out. That's what I wanted to show in this one. Just a little quick explanation or a simple tape read on how you manage a running position. So there you go. I just thought that I would share this idea. Looking at this back testing yesterday, I just thought I would share some trade management idea. Now again, to conclude the video, we expected a move higher from the higher time frame. So that would be bias would be a clear move higher above this high and this volume imbalance. Fair value on the 4-hour chart, we had this high and we had this relative equal high. Fair value gap, all targets to the upside. Again, we took out this low, so we expect moves to the upside. Coming down to the hourly, again, we took out this low and we have this equal high above here. We have this fair value gap and we have these equal highs up here. Looking at a 15-minute, the narrative would then be clear to see that price would be targeting these equal highs up here, this high, and then as we expected, this fair value gap on the 15-minute and this old high. That would be our narrative. The narrative would be expect a trade up into this fair value gap and these highs. So the draw is clearly on more than one time frame. We've seen the draw is for price to go up higher, so we expect higher prices. So that my narrative would then be for price to go up into this fair value gap and this high if it does trade up with explosive impulsive price action. If any other day, we probably would have gotten more of a move higher, but since it was a high resistance liquidity run, this is what we get. And again, the narrative would be to take out this high, these equal highs and these equal highs right there. That would be the narrative. We would expect these highs to be taken. So that's the narrative. We had this breaker block. The breaker block was respected. We saw this trade idea right there inside of the macro, 1050 to 1110. So that would set the stage for the narrative to be expected higher. We then traded through this fair value gap, traded back, used it as a inversion support level, and then traded higher. Bam, bam. There you go. That's the trading idea. So hopefully you found this one insightful. Hopefully you've learned something about trade management. If you lose 3 PD arrays, then the trading idea will likely not be valid anymore. So then you can look to close your position instead of taking a full stop loss on the trade. And you've also learned more about partials, looking how partials will pay you each and every time. So that is how you manage a position. So hopefully you found this one insightful. Until the next one, good luck and be safe.